No, I'm not Republican or Democrat. I'm a capitalist. I don't like giving my money away when I don't have to give it away. And I would rather partner with the government. That's how I look at it, okay? So this is Island of Maui. That was 1973. The Rich Dad Company in 1996 was founded. My wife and I, Kim, we started the cash flow game, and we raised $250,000 through a private placement. And we agreed to give the investors $500,000 back, which in 3 years we paid all the money back. And so we make millions every month. Our return is infinite. Rich Dad is just running purely on none of my own money, okay? So then this was Tucson, Arizona. Tom helped us on this one. This is a real estate play. We had 144 units, 10 acres. The price was $7 million. We had 2.5 million equity, and that was the cash raise. Much of it came from my wife and I, but we had two other investors in it. And then we borrowed 4.5 million in debt and 5 million in a construction loan. 144, 2.5, 3 years later, went to 108 units. We're now at 252 units. The new appraisal came in at 15 million because of rents. Our NOI went up, net operating income went up. So the bank gave us a $12 million new loan. The $12 million amortized or paid off the old loan, the construction loan, which left $3 million. We gave back the $2.5 million to investors, and we split $500,000 each. We're now infinite, and we put money in our pocket. Tom, that $500,000 that came into my pocket, why was that tax-free?
So, you borrow money, it's not taxable, is it? Because at some point you have to pay it back. So all of the money that came out, anytime you refinance a deal, that's tax-free money. You've borrowed it from the bank, no tax.
And the reason for that was in 71, as most of you know, Nixon took the dollar off the gold standard. And for money to be created, we had to borrow. So when these idiots tell you get out of debt, that's almost un-American. Money is only created when you borrow. That's why they give you, what's that, United Plus, Mileage Plus. We'll give you extra free miles if you borrow money. They want you to borrow money. And these financial planners are telling you get out of debt. Fire that guy, say, hey, tell me how to get into debt. But again, that's the difference between rich dad and poor dad. Debt is good. Debt is bad. It's a matter of financial unintelligence. So we split $500,000, net income a year, 2017 is $103,000, infinite ROI. Now it's not, since then we've gone, I don't know how many units that was, but now we have 6,950 units. We can get there faster because we're using debt and we pay no taxes. So the 103,000, I don't know what it is today. Is that how we did it? Any comments on that?
Well, no, in fact, I've seen them do this on multiple properties. I mean, this is the formula, right? This is the formula. It's the formula in real estate, it's the formula in oil and gas. Frankly, it's the formula in business. So if you don't have to pay tax because you reinvest the money in the business or you reinvest the money in real estate, then you can use the taxes you would have paid to the government and reinvest those, and you can even borrow money. So it's almost an addiction, right? The more assets you buy, the less tax you pay. The more assets you buy, the less tax you pay.
It's worse than that. If I don't buy assets, I pay taxes. If I don't borrow money, I pay taxes. So for those of you who have an opportunity to go talk to the real estate guys, the investor cruise next spring is on infinite return. I'll be there with some of our other advisors. That's what we teach. I don't teach you to go to school, get a job, and put your money in mutual funds. I'm not that cruel. That is cruel and unusual behavior. So anyway, go talk to the real estate guys for our cruise next year. But why the Rich Dad was formed in 1997 was what does school teach you about money? Go to school, get a job, work hard, save money, get out of debt, buy a house, and put your money in a stock market, 401ks, mutual funds, ETFs, and savings. That's a recipe for disaster. And millions of people, my generation, the baby boom generation, are about to get wiped out because we're the first generation without a pension plan. In 1974, ERISA came in, Employee Retirement Income Security Act, which today is known as the 401k. In 2008, it turned out to the 201k. People get wiped out. This is the Dow for 125 years. You can see that it's been going up. But it was a giant crash in 1929. Look at 1929. That was not a giant crash. That was a pimple. But you look at what happened Nixon took us off the gold standard in 71. I was flying in Vietnam in 1972, and I have a new book coming out next spring. It's called Fake. Fake money, fake teachers, fake assets. That's when they rich, like the central guys who own the central banks, like the Rothschilds, that's when they started ripping us off, was when they got the dollar off the gold standard. Because up until 1971, the dollar was good as gold, because it was, when the Bretton Woods Agreement was backed by gold. But they don't teach you that in school. They tell you, go to school, get a job, work hard, save money, and invest for the long term in the stock market. It is a suicide mission. So this was the Rich Dad Company was formed in 1997 because I could see today's crisis coming. If you look at this, today we're in a triple top. We're going down, big time. Anybody who's been an investor, a stock trader knows a triple top is worse than a double top. The double top was 2008. We're now in a triple top. There's a possibility that we're going into beyond, there's booms, there's busts, there's crashes, and there's collapses. There's outside about 5% possibilities the U.S. economy collapses because of the fake dollars we're in, and bad education, and corrupt Wall Street, and corrupt central banks. As a surfer, I always knew the third wave was the killer wave. You better not get caught at that. That's how did I learn my technical trading? I cut school and went surfing. Anyway, next question. October 11, 2008, the IMF warns the biggest source of risk comes from the state and local government retirement plans. Simon Black, sovereign man, he talks at the real estate guys' cruises also. Spain's pension fund is fully depleted. You think the Spanish people have problems today? Italy isn't much better. Those are the two bigger countries in the EU. The United Kingdom has trillions of pounds worth of unfunded public pensions. Switzerland has a public pension that's only 69% funded. Any comments on that, Tom?
I mean, it speaks for itself. I mean, Switzerland is what we think of as the safe country, right? And only 69% funded. From an accounting standpoint, that's a nightmare.
Martin Armstrong, the largest pension fund in the United States is the CalPERS for the state and local governments. California state's very serious insolvency. CalPERS is underwater $1 trillion. $1 trillion. Who's going to bail them out? Because states cannot print money. All they can do is raise taxes. Social Security they can print, Medicare they can print, but they can't print for CalPERS. The state that's the worst is Obama's old state, Illinois. Their pension plans are toast. So Reuters, PBGC is going broke. The Pension Benefit Guaranty Corporation is insolvent. The PBGC has got major acts to backstop troubled pensions. Every baby boomer today is in trouble because every pension they're counting on, including Social Security and Medicare, are in serious trouble. That means, the people complain that millennials are living at home. Well, what happens when the baby boomers move in with their millennials? That's the future. And, Gene was talking about assisted living. I'm in assisted living also. Some assisted living homes are $20,000 a month. That's more than people make a year, a month. So assisted living is a great business, because it's guaranteed we're going to get older if you don't die. Dying might be the better way out, really. But anyway, the gap. This is the gap in America, the rich. You can see the poor getting poor. And these are working poor. These guys have jobs. My brother was a property manager in Hawaii. He interviewed these guys sleeping in their cars. The homelessness in Hawaii, California, and Seattle and New York is going through the roof. So my brother, being a property manager, to get these guys off his properties, he interviewed these guys sleeping in their car. They said, well, I have a job. I just can't afford a house. And then my brother was at the beach, and he saw one of his classmates living on the beach. He says, oh, I'm so sorry, you're homeless. He says, no, I'm not homeless. I'm living on the beach. He says, what's the difference? He says, I'm renting my house out. I make more money that way. And he gets tax deductions on that income, right, Tom? So that's why I like the real estate guys, charts, is that even the housing prices went down, rents went up. That's how you think. It's not about, is a mutual fund a good investment? Mutual fund, you put up 100% of the money, take 100% of the risk, take 100% of the losses, and you get 20% if there's any gains. The poor and middle class, this is what happens. They go to school, they get a job, they pay taxes, goes to the government. It's all cash flow. They put an IRA, goes to Wall Street, and they buy a house, goes to the bank. That's why the poor and middle class are going broke, because they went to school, they're told, get a job, work hard, save money, 401k. Any comments on this cash flow pattern, Tom?
Well, I mean, what I see is, I look at that, and it's all cash flow going out.
Yeah.
There's no cash flow going in.
They don't know how to turn the cash flow back in because they went to school. That was my poor dad, PhD. Poor, helpless, desperate. That's what it stands for. And they run our school systems. They're teaching your kids and your grandkids. And we wonder why we're in trouble. It starts in school. No financial education in school. That's why I started the Rich Dad Company. This is really simple stuff. You don't have to go to Harvard to understand the little squiggly lines. This was all Rich Dad, Poor Dad was. This was all this with Cash Flow Quadrant. Still our bestseller. This is why they get richer. Taxes, debt, I reinvest, 1031 tax-deferred exchanges. And I buy gold and silver. I do not save money. I save gold and silver. I have millions in gold and silver because I don't need money. I don't need cash. I have cash, but it's short-term cash. I'm waiting for the next crash, I can go back in. I save gold and silver. Any comments on that, Tom?
Well, on all of this, every time you buy an asset, your taxes keep going down. So even if you have income from other sources, a business or a job or something else, with the right tax planning, all of those asset purchases over here, all of these assets that you're buying over there create more tax deductions, which means that you send less money to the government.
Yeah, I use debt to buy assets. And the more debt I use, the less taxes I pay.
That's right.
And the more assets I buy, the less taxes I pay. And instead of selling, I don't like to sell because that's a capital gains, right?
Right, but if you just borrow the money out, if you just borrow against it, then that's not taxable.
Good accountant, good attorney, and smart advisors, you can get there. I was a C student. I really don't know much. Tom will verify that, right, Tom? But I do have a smart wife, right?
Very, very smart wife.
The key to success is marry a smart woman, okay? Got that?
That's his key.
Yeah, as my wife wasn't rich either. She just understood real estate. But she says, when it comes to money, women are much smarter than men. And I'd have to agree. So anyway, that's why she wrote the book, Rich Woman. Okay. But this here is McDonald's formula. This was my formula as a kid. If I get $1 million, what does that mean, Tom?
Well, so what that means is I have to go borrow $4 million to buy a $5 million asset so you don't pay tax on the $1 million.
You know, and wherever Tom and I go all over the world. Some moron, you know, will raise their hand and says, they say is, you can't do this here. And what I say is, you have a McDonald's? What do you think McDonald's is doing? Read Rich Dad, Poor Dad, you know, Ray Kroc's. When my friend from the University of Texas asked Ray, he says, Ray asked the class, the MBA class, he says, what business is McDonald's in? Answer was, real estate. Today, McDonald's owns more real estate than the Catholic Church because if you saw the movie Founder, it's in there. All these yo-yos and all the countries we go to, these academic types say, you can't do this here. And all I say is, do you have a McDonald's here? The trouble is, they can't see it because they went to school. Anything else on this, Tom?
No, I mean, to me, it's a very simple formula. Yeah, I don't think you get any more simple than that. And that's how you don't pay taxes legally. Because again, everything we're talking about is how not to pay taxes legally. Do what the government wants you to do.
Yeah. Debt makes you richer. Debt and taxes make you richer. This side, debt and taxes make you poorer on this side. Go to school, get a job, work hard, save money, invest in the stock market, get out of debt. How taxes make the rich richer? Any comments on that, Tom?
Well, what's interesting is this is common around the world, by the way. We were in Australia early this year and then South Africa before that. And these are common tax rates around the world. So the U.S. is actually, this last tax law change has actually made us a bit of a tax haven compared to the rest of the world. So we're better. We're still, that E and S quadrant are still pretty high.
But the problem with the tax breaks is making the U.S. dollar stronger, which may bring the economy down. Because as the dollar gets stronger, everybody gets weaker because China and Japan are in serious trouble. So the dollar getting stronger means our trade deficit increases because we don't export as much. So we have 4 problems facing America today. Number 1 is rising interest rates. Number 2 is China. Number 3 is, what was I going to say?
Strong dollar.
Strong dollar. Number 4, retirement. That's why we might come down, those 4 choices. So this is tax-free income here. Depreciation, and that's that Jared Kushner thing. Oh, he's cheating using depreciation. What is that, Tom?
So depreciation is really just basically supposedly the wear and tear on a building. The difference is that, if you buy a chair or you put in carpet, it really does wear out, whereas buildings tend to last a lot longer than the depreciation.
Is this depreciating right now?
You can watch it.
Yeah, it's accelerating.
Actually, carpet, now we get to write off the first year. We don't even have to depreciate it.
Are the lights depreciating?
First year.
Furniture?
First year.
Yeah. Appreciation. Why is appreciation tax-free?
Well, so appreciation, remember, we don't pay tax until we actually recognize that gain. So we can appreciate all we want in gold and silver and real estate, oil and gas. If we don't sell it, we don't actually pay the tax. So we can keep it appreciating, we can borrow against it, and not pay the tax.
Amortization.
So amortization is great because you've got debt that you use to buy this over here, but that debt is being paid for by your tenants, customers, etc.
And this is what the New York Times says is some kind of criminal offense. So anyway, ROI Satori, moment of enlightenment, ROI, infinite, can be created with any asset. Once you see it, you can do anything. And that's what we'll be teaching in the real estate guys groups. You can do it with stocks, bonds, options, avocados, anything. But you have to have the education. And that's what our school systems are not teaching us. And that's why we're in serious trouble, because we're run by idiots. So thank you.